This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. Welcome back. We're going to go through the market and take a look at what's taken place here this week. Just in the last few days since the Fed spoke, we've had some pretty serious movement. Let's just evaluate just how strong it looks, looking at multiple time frames, and then we'll evaluate all the market conditions as well. So let's go ahead and get going on this. Okay, so we've got the sentiment right now at 17%. It dropped from 26 to 17% in 1 week. That's the Investors Intelligence investment survey. It's the bull-bear spread. It's the difference between the bulls and the bears. So it's plus 17 right now. There's 17% more bulls than bears. And right now we have 43% bulls, which dropped from around 50 last week. So it's a pretty substantial drop, and it does move it into the positive camp. It's unfortunate it just happened a week late. We talked about this last week, this drop. It was just a little bit of lag, and I thought we would get these numbers last week. And with the oversold reading that we had in both the short-term daily chart on the RSI 5 and the weekly chart, where this was positive because it was way down at like 18%. We thought we'd have a really nice little trading move, which is what we got, which is, I said, was a possibility. It's just not quite the type of thing that I want to sink my teeth into necessarily without a little bit more bullishness. But we came back to this support zone. We were deeply oversold on both the daily and the weekly RSI. And now this has worked off very quickly. So we don't really have, now we're back to neutral on the overbought, oversold, even though the sentiment has improved. Now, that could mean that we're going to rally up a little bit more. But I'll get into that when I get through the trend and momentum, which are all neutral right now. But we do have something kind of important to talk about. First of all, if we look at the daily average true range, it is still rising above its moving average here. So that is a negative. All right. As long as this is rising, there's increasing risk in place. Now we're seeing this a lot of movement right now, and now we're up into the overbought zone. Now, because it was such a strong move, it's possible it'll need to maybe form a little divergence or something like that, kind of like what we did here. Or I think if it's going to fail, it's probably going to need to do it like right this second, early Friday morning. Start to show signs of some kind of a reversal if it's going to turn down. If it's not, if it pushes up a little bit more, then I think you ought to be looking at the fact that we've got some volatility in place, and we're going to be looking to play a pullback of some kind. But the bigger issue that I see developing here is what's taking place on the weekly average true range. See how this is crossing above its moving average? Now, I want to make sure you understand this is only neutral. It's not negative because the moving average is still declining. All right. And just to give you an idea here, when this crossed above, that was way back here, or right about here. And by the time the moving average started rising, it was more like here. And we went through an entire rally phase before that ended. So this is an early warning sign, and it's not telling us that anything immediate right now, but I think we ought to be on the lookout. Guess what I'd be looking for now is an overbought reading, right? I mean, if we get an overbought reading and this stays high and this moving average starts to cup around, then I think there's a lot more risk in a potential pullback or a decline of some kind. So something we want to be on the lookout for. Right now, I just think it looks like it's targeting the 18-week. But let's go ahead and move over. Actually, let's just first talk about what's going on. I've got my 18 charts, my 18 lines up. So for anyone new to this YouTube video, this channel, I've got a yearly line here, a quarterly line here. This is the 18 quarter, right? This is the 18-month line. The blue line is an 18-week, and then the purple line is an 18-day. So if we start to look at what's taking place here, it came right down to our 18, just like it rallied up to the 18 back here, kind of rallied up to it here. We can even go back a little bit. We can see how we pulled back to it when it was rising back here and got a really good rally. So we're getting this rally. I'm planning on and expecting this to be pinball. Okay, pinball meaning we're going to bounce off this and then we're going to rally up to the 18 and we're going to bounce off that. And then depending on how it ricochets, if it turns around and holds the 18, then that could set up a possible up move. All right. The dynamics of the low, I think, are pretty interesting, just based on the price action. A lot of times you're going to see the indicators lag a little bit when they have this type of movement. But, it's way too early to tell. And what I always suggest is instead of worrying about the up move, worry about the pullback. If the pullback is orderly, if the pullback holds support, if the whole pullback doesn't have a bunch of red bars, then it's something we want to be playing. I don't think we want to sit here and, first of all, just fly by the seat of our pants and just jump into this right this second, up this much in a short period of time. We've got a lot of news coming. I know Apple's coming at the close. I'm not expecting them to say anything horrific, but you never know how the market's going to react. And then we also have another jobs report, constant movement based on the new data coming in, especially with what the Fed said this week. So anyway, I just thought it was important to recognize that we just came down to this 18-month and this was the area we were looking at. And we were oversold, right? So a lot of reasons to believe. The only really thing that was missing, and we'll switch over to this. So I think, so I was hoping we'd have the sentiment. We were sitting right on the right spot. Okay, we got the MACD down closer to the 0 line. We didn't show a lot of strength in the sellers on the weekly time frame. There was a few components missing to really playing this aggressively off the low. That doesn't mean we can't participate on a pullback. We can see how this pulls back. If it pulls back the right way, then it's something that could be played. But I think right now, the most likely scenario is a rally up towards the 18-week and then a move down. Something like this is what I would be expecting. Some kind of a zigzag formation where we come up, pull back, and come back up like that. And that allows this a little bit more time to maybe work and cup around a little bit. And I think that would set up the pattern a little bit better. We just don't have a setup right now. We're below a declining 18-week line. And what I was pointing out last week is we were stretched away from both of these. So getting a rally is not that surprising. A rally that just keeps going would be incredibly surprising and actually pretty rare based on what we're seeing in the daily ADX. This is pretty strong selling, and it's not a climax pattern. We did have a little bit of divergence in the MACD, and so I switched the momentum for the daily to neutral as well as the price, because the price is now above its 18 and the 18 is flat. So we've got neutral trends and momentum for all three time frames. So whenever that's the case, I think we have to recognize that so when we're in this type of position, you have to realize that we've got some cross currents in place. This is actually underneath and cupping around, and this is on top and rolling over. It's not like they're in unison. So we have to wait for a little bit of confluence amongst these. I'm assuming it's going to be to the upside, but you never know. It could come down and fail here and then break down through this support at 4,000, and then we'd have this declining, and then this would roll down on top. So, we're going to have to stay on our toes right now. Unfortunately, this isn't the type of market where you can be all that comfortable, at least if it were me. I wouldn't be sitting here getting long and just holding on for dear life, thinking that the market's definitely going up. We're going to need a little. Today was one of the best days that the Russell 2000 has had in a very long time, and it did outperform today. That's the first time we've seen outperformance out of the Russell in quite some time in this whole drop. So now we're at this low. We've got to see if there's a better reaction. If this can make a 1, 2, 3 reversal on the daily and continue to show some relative performance, then I start to feel a lot better about the chances for the spider turning the corner, I still think it's going to fail at the 18-week area, somewhere around the 4,400 on the S&P, something like that, maybe a little bit above that, and then check back. And we're going to have to see if it's an orderly pullback, an orderly consolidation. Then I think that sets up a pretty good opportunity. All of this could be taking place while the 18 is cupping around, and we are forming a pinch play on the monthly chart. So a lot to digest right now. Big, strong move on the hourly, which is confirmed by ADX. I mean, there's no doubt about that. But we didn't have any signs of exhaustion to the downside, and we didn't have any signs of climax. I mean, you can see the volume. It's just not really climatic. So it just didn't give us one of those layup entry points. But what we can do now is see what kind of sellers come into place. If we get selling, it might not happen until we get to the 18-week, and then we get some kind of a pullback. And we're just going to have to see how strong the selling is. Once that happens, I think we'll have a much better idea of what this is what this market is actually up to. Now, I mean, if you're playing the indexes, you want to be looking to be more aggressive at these low points, especially when we're here, if it's an index play, because that's what you're trading. But if you're playing stocks and you want to use this as a tool to help you, time your investments, I still think it's pretty early. I mean, most stocks we're going to need a little bit of time to consolidate in here. There's been a little bit of damage done, just like this break of the 18-week that's been happening in a lot of stocks. We should spend some time consolidating. So don't always think from a stock by stock standpoint that low price is low risk. We actually want the lower risk is, in this situation, the higher low after we've made a drive through the trend line or something like that, which would be, something along these lines on a weekly chart. So the best thing that's taking place here is that we've formed something on the monthly that could lead to a decent play. We've got 3 lower highs. We've got basically somewhat of a doji bar on the monthly chart, and we're trying to lift off this and get through the 4 on this time frame with a pinch in play. So let's be ready here, but I would not chase right now. I wouldn't be chasing. I'd be looking for opportunities. Watch your RSI 5 on the daily. Right now it's overbought. See if we can't get an orderly pullback to get that back to neutral or even oversold, and let's see what it looks like. All right. So let me know if you have any questions. Thanks.